Let's bring in Dan Greenhaus of Solus Alternative Asset Management with me here at Post 9. It's good to see you.
Thank you, sir.
So Strategas today says this is a make or break week. Is that how you see it? Is that how investors should view it?
I feel like we've had several make or break weeks this year. And they've all made it. And I imagine this one will be much of the same. I mean, listen, obviously this is an important week. You get the jobs report on Friday, although I'm sure much of that will be and should be discounted. But more pressingly for markets, you get obviously large cap earnings beginning with Google tonight. I think the interesting thing with Google is a lot of the Mag 7, if you will, have done okay. Apple have done well.
Not this one. Not lately.
Not this one. That's right. And it plays into the broadening trade. But for Google, I think they're arguably the most interesting from a macro standpoint of all of them, owing to the number of issues that they're dealing with, particularly regulatory and the threats to search.
How high is the bar, do you think, given the underperformance of this stock?
I don't think the bar is particularly high, but I also think they better not have meaningful weakness in the search business. And as I've said 100 times, I'm not a particularly large tech investor, but if I know they better not have particular weakness in the search business, then the broader markets certainly do. And I think that's an area, obviously, that everyone's going to be watching.
The other area of the market that everybody has been watching is the Treasury market, because of the backup in yields. It doesn't seem to be a huge issue yet for stocks. Is that fair?
No.
And if it isn't, what is that?
Why would it be a big issue? Why would it have been a big issue?
A backup in yields?
The 10 years up, let's call it 70 basis points from the Fed meeting, and the S&P 500, both equal and market cap weighted index, are sitting effectively at all-time highs. So that tells me, forget my opinion, so far it obviously hasn't been a problem. What's interesting is if you had told people on the day of the Fed meeting the 10-year is going to go up 70 basis points, where a broad equity is going to be, I don't think many people would have said at all-time highs.
Well, it's been a problem. I think you could make somewhat of an argument for the broadening trade, right? I mean, it's a problem for small caps.
No, I would take the other side of that. With the
you think it's good for small caps?
Well, hold on. As I've argued all year long, I don't think the broadening trade means small caps.
No, I don't think it does either, but that's an area that has been hit with the backup in yield.
Sure, deservedly so because of floating rates, et cetera, that we've discussed ad nauseum. But mid caps are basically at an all-time high. And as I've said 1,000 times, the average viewer out there cannot name 5 stocks in the Russell 2000. You can name 1,000 stocks in the mid cap.
But the way people invest these days, they're buying broad indices. Maybe they're stock picking less than they were. So it's all relevant. It all matters. I mean, if you keep hearing about this broadening trade coming, hey, it's time to lighten up a little bit on mega cap tech and go to the smallest areas of the market now that we think the Fed's cutting, the economy's still strong. Well, it just hasn't played out that way.
You said 2 things there. One is we keep hearing about the broadening trade, and the other, you've got to go to small caps. And I think that's 2 different things. My point has been and remains, the issue isn't you need to go into small caps. It's that other areas, other sectors, other industries, other cap sizes, particularly mid caps, can do well in a broadening environment. And again, you've seen that. The market's at an all-time high, and we mentioned Google's basically flat. Microsoft has not traded particularly well. Tesla's pretty volatile, but has been flat for some time now.
But Meta and Nvidia have picked up the slack from those companies.
No, without a doubt. But if I had told you that 3 of the 6 or 3 of the 7 or 4 of the 7, I forget the exact number, would be basically flat all year, or at least let's say flat since the spring, where would the market be? I don't think most people would say at all-time highs. And yet, a number of other sectors, we've talked about utilities, industrials, et cetera, have picked up the slack. And so you've absolutely, unquestionably, unequivocally seen the broadening. It just hasn't come in this one area that people keep pointing to as if that's the only definition of market broadening, is if the small caps rally. I have disagreed with that, and I still do.
These earnings come at an interesting time if you're trying to game out the market going forward, because you do have that event called the election a week from today.
We do.
Normally, you'd say, okay, the next few weeks of trade could be driven by what happens with the mega cap results this week for obvious reasons. But this time, it's potentially different. You get the jobs report, as you said, but then you got the election.
Yeah.
And the potential messiness around the election. When are we going to know the winner? Are we going to know on election night? Are we going to know the next day? Are we going to know next week?
We will not know on election night.
Are we going to know the next week?
Statement.
Right? The market, I guess my point is the market's patience might be tested in the next 10 days.
So to wade into politics for a moment, you will not know election night. You will probably know within 48 hours with some conclusivity, some definitiveness, who the president will be.